how would we evaluate whether or not a company is doing well on the investment side of their business model?
So if you go to the financial statements and you look at the investments, I like to look at that especially because you can really find out how much risk they're taking. One thing they'll always show is the percentage. Most insurers invest mostly in bonds. So you'll look and you can see by, for example, by credit rating, they'll show percentage of investments that are held in government securities, percentage that are held in AA corporate bonds, and that gives you a good idea of how risky an insurance company is. There was one very small insurer that was run by some very interesting people, and for a long time it had a lot of its money invested in gold stocks and gold and silver, which, if you think about it, is a pretty terrible way to run an insurance balance sheet because if at the same time gold goes down, a huge hurricane comes through, you're in a world of hurt.
That is really interesting. So gold is a whole nother issue we could do an
Right.
entire podcast on. There are definitely some gold bugs out there. I think one of my colleagues called them the other day, which is crazy because ever since what's his name, William Jennings Bryan, I hadn't realized that this was like still a thing that people were so obsessed with.
Right, yeah. So if you ever have some survivalists run your insurance company, you might want to double think it. That's one of the biggest risks. But for the most part, I mean, most major insurance companies are pretty plain vanilla in how they invest their money. It's, say, 95% fixed income or bonds and 5% stocks. And they don't take too much, they're not interested in taking too much risk on that because they know a lot of the money they take in premiums will have to be paid out in losses and expenses relatively soon.
Yeah. Okay. So here's the thing, right, is that we're doing an episode about something that a lot of people think is super boring. So I asked Jordan Wathen to come up with some fun facts about insurers. So I think it might be time, after talking about some very boring bonds, to come up with a fun fact. You want to go for it?
So yeah, we can go with some fun facts. So way back in the day, and actually first I should give a shout out to this book, which is called Invisible Bankers. Actually, it was interesting that we talked about insurance companies being like banks. But the book's called Invisible Bankers. I would highly recommend you read it. And you can get it on Amazon for all of $1, so it's worth checking out. But few of the fun things they had in there was one about in the heyday of air travel, insurance companies made a fortune selling life insurance to air travelers. And they basically pitched it as this huge risk that it was, getting on a plane was basically, taking a huge risk with your life. But all at the same time, while they're selling travelers life insurance on the plane, they're underwriting pilots at the standard rate. So basically they're telling travelers that traveling is so dangerous, but the people who fly for a living, well, they're just standard risks.
That is super sneaky. Again, why maybe people think that people who work in financial services are villains. Take note in case you want to change your perception, insurance companies.